just want to highlight what Trump said today. He basically took credit for the U.S. economy, saying that his boosted growth, his boosted employment. Can Trump take credit for the U.S. economy for where it is right now?
Well, I think that the growth in an economy results from a combination of factors. And I think it's no doubt that the fiscal boost that the U.S. economy got a couple of years ago is something that has influenced positively the U.S. economy. Of course, this is something which is not going to be there forever, but the impact is going to sort of fade gradually over time. But yes, I think that that's a positive. Of course, something that has been very important has been the way that the Federal Reserve has been managing monetary policy in order to avoid that inflation is lower than it is now. They have not pushed it forward as much as they wanted, but inflation is now in a reasonable range, and they have managed, I think, their interest rate policy wisely in line with the double mandate of inflation and full employment.
The resilience of the U.S. economy has caused such a euphoria in the markets, in particular the stock market. I mean, is there a sense that investors are mispricing risk, and the longer the rally goes, the deeper the fall?
Well, there is a bit of an exuberance of equity markets, particularly in the United States, and this is not something which is new. This is something that has been going on already for quite some time. So the question is, how long will the rally last, and then when it ends, what's going to be the aftermath? And I don't have a crystal ball, but I think that markets are getting a little bit ahead of fundamentals, particularly in U.S. equity markets.
I'd love for you to wear your IMF hat for just a second here, because amid all this euphoria, what are the big risks that you see, those big things that can upend this market rally?
Well, I think that the if one looks at the short term, 2020 looks better than 2019. I think that the good thing is that the big anxieties have been significantly lessened, although the uncertainties remain, and that's a difference. But I think it's good that the IMF yesterday, for example, confirmed its forecast that things are going to move up, although a little bit less than they expected, 1 decimal point, but that growth would go from 2.9% this last year to 3.3% in terms of the forecast. I think that this is good news for the world. So I regard the atmosphere much better now than it was a few months ago. And I think that this is very more important. In terms of the risk, at the end, everything has to do with confidence. So things which undermine confidence because of geopolitical issues in the Middle East, or now a potential trade dispute between the United States and Europe, which again involves two of the largest three economic areas in the world. I think that this is something that would not be good for confidence. And it was good for confidence that we had this phase one deal, and that some anxiety was taken out of the Brexit process.
Speaking of uncertainty in Hong Kong, a lot of the unrest, how has that impacted Standard Chartered? I know the company has said that a lot of clients they've seen start opening accounts in Singapore. Can you give us an update on that?
Well, we have seen some anecdotal evidence of accounts of clients asking for accounts to be open in Singapore, but no significant amount of money flowing. So this is something that people do as a precaution. If you look at our deposit base in Hong Kong, it keeps growing. The business is doing well. Of course, the economy has tanked, and this is something which is being reflected in some lesser activity, lesser momentum. But for the time being, things are reasonably good, and Hong Kong remains a most profitable operation for us. That doesn't mean that if the unrest continues and the economy recession continues or aggravate, there would not be consequences, because we would be immune to things that nobody is immune. But we have built a business which is very resilient, and we have the capacity to withstand tough moments, and so far things are reasonably good.
Adding to some of those concerns, the China virus that caused markets to correct. I mean, we saw Hong Kong itself down 2%. How closely are you watching that?
Well, we're watching that closely, And I think it's too soon to tell what the actual consequences will be and how sort of circumscribed would be the infection to certain areas. But that's something that we're attentive to, and we will act accordingly. But again, I think it's too soon to tell, and we'll put the safety of our staff and clients first. But so far, I don't think that we need to go much further, because we don't really know how important this is really going to be. And if it is, we'll act in consequence.
I want to talk about a topic that's near and dear to my heart, investment banking. Standard Chartered had very strong third quarter results, and I think Wall Street is wondering, is there an opportunity to expand the balance sheet for the trading book and investment bank?
Well, our corporate and institutional banking, which is how we call that part of the business, which is linked to investment banking, has been doing very well. And an area where we continue to do very well is regarding trade in terms of cash management and custody. And this is something which is very important for us, because we do a role as a sort of national custodian in markets where other people don't operate, through Asia, Africa, and the Middle East. So all of this is going well. And as you saw in the data for the third quarter, our corporate and institutional banking did very well. And that's a continuation of the trend of the last few years, where we have been in a positive slope.
Jose, climate front and center at this Davos meeting. I mean, Standard Chartered recently said that it will finance customers, companies, which generate only less than 10% of their earnings from thermal by 2030. I mean, what caused the thinking?
Well, we're trying to be strict and consistent with our spirit of being a very sustainable bank. You know, Standard Chartered colors, institutional colors, are green and blue, and we try to be very consistent with those colors. And already towards the end of 2018, we made a strategic decision to stop the provision of any financing for new coal-fired power plants in the world, and being a bank which banks in emerging markets, we were the first to do that, and this is something which was very important. And what we did instead is to use that money to finance renewable energies, and we haven't seen any problem from that, on the contrary. And then we have gone further with our sustainability targets, and the one you mentioned is the next one. And then we hope that we will be making a difference by leading in that way. And for emerging markets, it's very important to take that tough stance. And we know that this amount of money that we are not providing there, we are coal-related, is going to be provided with renewable energy. And we have upgraded also our targets regarding the provision of money for renewable energy, and we'll continue to do that in a very significant manner.